Today on Huge Profits, we're going to explore whether the current president, Donald Trump, regardless of whether you like his politics or not, whether or not he was a good commercial real estate investor and developer, or whether ultimately he failed. And we're going to do so by breaking down a number of his most famous transactions and maybe some that even floated a little under the radar. And what I'll tell you is that this episode, not only is it going to be good, it's going to be bigly. No, it's not going to be bigly. It's going to be huge. So I guess a lot of people look at Donald Trump as a very controversial figure today.
Obviously. And any politician is.
Every politician is. And, obviously they're fiercely in their foxholes, regardless of whether you believe he's good for the country, whether he's destroying the world, all of that. But he lived an entire lifetime and a career before he got into politics.
Absolutely.
And he was one of the most notable, successful investor developers. And a lot of people point to the fact that he had filed bankruptcy on many projects over his career,
sure,
which again is something that people look at as a black eye, but it never stopped him when he ultimately did that. He was restructuring projects with creditors and going all the way back to the projects that he saved along the way, like the Wollman Rink or 40 Wall Street, or ultimately what became the Atlantis Hotel and Casino, one of the most famous resorts in the world, which he actually sold to Merv Griffin, which is a little note. He's done some really incredible things. And the good news for him was he was able to build as a second generation developer. So he did absolutely have a little bit of a
small
advantage.
$1 million loan from my father.
I think it was a small $200 million loan,
right,
and it was an advance. And the advance did work. But I took that and I made 100 times its worth.
Look, you give me $1 million, I'm going to probably buy $950,000 of taco and a $50,000 house.
Well, let me put it this way. You give most people $200 million, they're going to end up in a squat house, okay? They're not going to necessarily become the leader of the free world.
Right.
They're not going to have a #1 hit television show. And so whether you like him or you hate him, I mean, he certainly has a ton of bombastic approaches. He's got a very forceful negotiating style.
Yep.
He uses leverage and all of those other things, but it wasn't always that way. As a commercial investor developer, let's break down his acumen.
Yeah, I mean, look, whatever you think of the guy, what we're talking about today isn't a vacuum. We're looking at whether or not Donald Trump was a good and successful commercial real estate developer. Now, maybe we'll do another episode on whether or not Jimmy Carter was a good peanut farmer, or if George Washington was a good, rancher,
or
whatever it is.
Barack Obama was a good community organizer, right?
Whatever
All those things are real because everybody had a career before they became prominent in politics.
Look, the Rangers never won a World Series when George Bush owned them.
It's true.
Right? So look, you can do this with any president, but being that we talk about real estate and investment and development on this podcast, I think this is a really interesting topic to say that this is one of the most famous real estate, if not the most famous real estate investor ever.
In the history of the world, for sure.
In the history of the world.
There's no doubt.
Right?
I mean, you could go back to, let's say, Marcus Aurelius.
Right?
Right? Maybe.
Well, I would say Crassus, but
okay.
Look, if you want to get into how Crassus bought his real estate empire,
it's crazy.
He would go and watch these buildings burn, right? And they're like, oh no, your building's burning down. Oh, Rome doesn't have a fire department? I have a personal fire department. I put the fire out for you, but you're going to have to sell me the property. They're like, I'm not selling you.
Well, let's watch it burn.
Okay, I'll sell it. I'll give you 40% because there's a lot of fire damage. And he became the richest person in Roman history through that. Now, whether Donald Trump used those same level of tactics, I don't know. We'll get into it. But look, the guy, it's indisputable that he made a name and an empire for himself in real estate, which he launched into a political career for whatever that is, right?
Well, and he used branding. So before branding was a thing, the Trump name actually became quite prominent. And while his father, Fred, did some great stuff with housing and other sorts of developments, he took it to another level where he started to focus in on office buildings and hospitality, which again, this is, in New York City and Manhattan, that was the gold standard for those decades where he was really the most prominent in the world. And then he started to export his name to other facilities, all across the world. And that name brought cachet, it brought quality, and it brought, let's say, a foreknowledge of what the end product would look like as opulent, top-end luxury and those sorts of things. Now, again, not all of the projects worked out by any stretch. You'll talk about, some of the casinos in Atlantic City, whether they worked or whether they didn't. He started the USFL, to compete with the NFL.
Yep.
So not everything was fruitful and not everything worked.
Not everything I do is fruitful or works.
But in the end, I think the project that put him on the map first and foremost was that Wollman Rink renovation.
Okay, I don't know about that one. Tell me about that. Let's jump into evaluating these deals. So what is this one?
Yeah, so this was a great one. So he was, he had taken over the family empire and was starting to work on some stuff. And it had become front page news. Anybody who knows anything about New York City in the 1980s, it was completely dysfunctional. It was very derelict. If you had gone anywhere downtown or near Times Square, it was squalor.
Okay.
It was drugs, prostitution. There were peep shows everywhere.
Looks like a Scorsese movie.
It really was. Yeah. It was exactly what you
The
would think.
gritty 70s crime drama. It was real.
Yeah, it was actually happening, right? You go look at Taxi Driver, that's what was going on. 12-year-old prostitutes, right?
Yep.
So it's awful, it's terrible, and
They just moved those to the islands.
well, theoretically, right? So Ed Koch is the mayor of New York City, and the Wollman Ice Arena, which was in Central Park, was a very popular destination. It would open from, let's say, October through April, and folks would go in there.
Is that Buddy the Elf went skating?
It might very well have
Probably.
been. It probably was. I don't think there's multiple ice rinks in Central Park.
Okay.
And so what ended up happening was it had fallen into disrepair. It had been donated in the 50s, but by the 80s, it couldn't make ice anymore. And so the city decided that they were going to renovate it. They were trying to go through it. It was 7 years and $13 million spent, and they had not been able to fix it. They couldn't get it done. And it was becoming front page news. It was an effective demonstration of how government and bureaucracy can slow down a development and can ultimately squander literally millions of dollars, right? It ultimately ended up being just at that number about 400% of the actual budget that it took to do it, that they spent just planning for it.
Perfect.
So long story short, after 6 or 7 years of derelict attempts, Donald Trump steps in and he says, look, in 1986, he says, I'm going to I will take on this development. I will help renovate it. I will get it done, and it will be open in time for the holidays. Now, they've had it for 7 years.
Okay.
He's going to get it done in 7 months. And he says, and I'll get it done on a fraction of the budget. I think the budget was around three, maybe $4 million at the time. So not only did he open it in October, but he did it at 25% under budget. And they all asked him how he could do it. He said, look, the people who are doing this, they're nice people. I like these people. I even donate to some of their campaigns. He goes, but they're morons. They have no idea what they're doing. And they're weighing in on all of these things that they have no expertise on. So then they went ahead and they began to manage that. And they managed it from 86 to 95. And then they turned it over to another group. And that group in 6 years had allowed it to fall into a level of disrepair. So they brought him back in 21, and he managed it, in 01. And he managed from 01 to 2020 when, obviously there was this January 6th event, whether you feel it was an insurrection, whether you feel it was a peaceful demonstration. We're not here to talk about that. But based upon that, they terminated the contract in the city of New York because of that event. Mm-hmm. And here we are 5 years later, and again, they're having problems with it. And they tried to find a new operator. They fired the old operator, and the new operator, Trump put in a bid to do it, to restore it. And because of politics in New York City right now, and because of some of his convictions on, some of the claims that were brought against him and the charges that were brought against him, they said they're going to keep it to themselves. And it continues to fall into disrepair. Mm-hmm. So again, it shows the efficiency, because a lot of developers, where they go wrong is they underestimate the timelines and they underestimate the cost of renovations. Mm-hmm. But here he was able to step in on a project that, the entire resources of the city on this incredibly highly visible project right in the middle of Central Park that gets, so much love from the residents and the visitors of the community, and they can't get it straightened out in 7 years, and he gets it done in 7 months. Mm-hmm. I'd have to say that that's the first inkling that you've got somebody who knows what they're doing. And by the way, he said he would do it without doing it at a profit. He disclosed an open book contract where they made no money to do it. And ultimately, it made him one of the most beloved individuals in the city of New York, because he was able to restore that amenity.
Then, not now.
At the time.
Yes.
At the time, 1986.
All right. So I think the property that most people will think of immediately when they think of Trump is Trump Tower, 40 Wall Street.
Well, and again, that's not Trump Tower. 40 Wall Street is not Trump Tower.
I said most people. Okay. But if they actually knew what they were talking about, unlike me.
That's totally fair. That's totally fair.
All right.
I've been a let's say a student of his methodologies and development and strategies, because if you're going to be in commercial real estate, you should take a look at those who have done it most prominently and for the longest duration. You pay
Although the
attention
guys like Sam Zell or people like that.
Yeah,
right?
fantastic guys out there. REITs, local guys in town. Forest City, the Wolstein partnership, which became multiple REITs.
Dolan's,
fantastic group all over the country, right?
And you got to learn from all these people because they're,
Well, they do it. And what I've learned in certain instances is what not to do, and in other instances, kind of what to do. So when I read the book Art of the Deal, which talks about Wollman Rink, and it also talks about 40 Wall Street. 40 Wall Street was this unbelievable, like neoclassical French Gothic tower built in 1930.
Yep.
And so that's at the same time. And as many people may recall, the Empire State Building was built in 1931.
Okay.
So when it was completed in 1930, this Art Deco tower was in the heart of the financial district. It was Wall Street, and Wall Street had really just happened in the 20s, right?
Yep.
It was not a thing before that. And so it was magnificent. I mean,
Wall Street was just where they had a wall when it was New Amsterdam.
Yes.
That was the walled city. That was the wall. The wall ran along that street, and then they tore down the wall. Now you got Wall Street.
Yep. And ultimately today it's a global brand, right?
Sure.
Just because of the naming of the street. And so being at 40 Wall Street, the address had as much value as the structure itself. Because when he bought it, it was in incredible disrepair. But he got it. But when it was built, it was literally in competition for the tallest building in the world. And it eventually lost out to another building that opened in 1930, the Chrysler Building. So that became the tallest building until supplanted by the Empire State Building.
And Chrysler Building put those, the peak and angle up there to be the tallest building in the world.
To be the tallest building in the world, I mean, and just unbelievable architecture. Both of them still stand as marvels of modern architecture to this very day. So by 1986, it had fallen into incredible disrepair. It was functionally and financially distraught.
It's a 1930 building living in the 1980s world.
And it hadn't been really renovated, and now we're talking about limitations of that type of construction. While it's beautiful and it's amazing, it really isn't functional. Today, multiple office buildings allow for you to repartition spaces. You have column spaces that allow for wide open, views. You can see all four exposures through your curtain wall. This building was very different, but again, gorgeous in its own right. 40 plus elevators, a structural marvel, to be honest. And it had $39 million worth of debt on it, and it simply could not perform. So Donald Trump went in and he offered $1 million cash to assume that $39 million debt. So he had a total basis between...
Explain what assuming the debt means.
So he said, look, there's not a lot of people who can make this asset perform with $39 million in debt. So I'm going to assume that loan.
So I'm taking on that.
I'm taking that on, but I'm only going to bring $1 million of fresh capital to the deal.
Okay.
So he says, look, I'm going to service your loan. You're going to have to give me my terms, and I'm sure his terms include forbearance and delayed on payments and other things. It's a 1.2 million square foot building and 72 stories high. So this is not your average bear that's going to come in and get this.
Yeah.
So there's not a lot of people who could take something like that down. And when he approached the senior lender and he approached the ownership group, they were distressed. They were getting ready to take a $39 million hit because they couldn't perform.
Yeah.
Now, he didn't buy it conventionally. What he did was he assumed that debt, which meant that he went in and he said, bank, I'm going to pay you under my terms. And then what he did was he renegotiated those terms with the lender to allow him the time to renovate and reposition the building.
Yeah, they're not going to give that deal to anybody who comes along with $1 million.
No, probably not. But you know what? If they're bleeding and there's new debt and you can guarantee that debt, and he assumed it.
Yep.
I won't say that he guaranteed the debt. I think he may have just brought the cash to the table and then let's say the resume.
Yep.
But over that period of time, he got this at an extremely low basis. If you talk about his cash basis, the $1 million he brought in, he bought that building for 83 cents a foot, right? And you're talking about to build something like that in today's dollar, probably $3,000 to $5,000 a square foot.
Wow.
Couldn't even do it. Okay?
You probably couldn't. Yeah, you wouldn't do that.
Wouldn't do it, couldn't do it.
Yep.
And more than that, even if you include the debt, it was only $33.33 a square foot. So it's an unbelievable deal just on the face of the acquisition. Now, because of that, he was able to hold the building through weak leasing periods. And
that was the problem, was that it wasn't leasing back then. Right?
Well, what ended up happening was in the late 70s and the early 80s, interest rates spiked, right?
Okay.
There was oil embargoes, there was all sorts of political turmoil. You had that interest rates are at 18 to 21%.
Jeez.
Banks are really not lending. People can't even imagine what the world would be like if that was the case today. And so many companies went out of business. There was a huge recession. It was inherited by Ronald Reagan at that point in time. And he started to pull things back and bring it around. Now, before 1986, there was a major tax code change in 1986 that said if you were a passive investor, you could offset active income. So if you're a doctor and Texas, and you invest $1 million, and let's say your building lost $1 million, even $2 million, you could use that $2 million loss to offset your salary,
your regular income.
your regular pay. Today, that would be a passive loss and could only offset passive gains.
Okay.
So in 1986, when they changed that, it completely flipped the world of private capital or investor dollars. So when Trump went in, there's nobody else out there to save this building. So you've got this economic turmoil. You've got all of these problems. New York City was not what it was today, which is a shiny, polished apple. Maybe a little, beat up after COVID.
Yep.
But I mean, it's still the financial capital of at least the Western Hemisphere, no doubt. And so he's got this opportunity to buy this right in the heart of the financial district, derelict and all of this other stuff. And so he gradually started turning around. He made the renovations. He, added that Trump panache to it. He made it more functionally efficient. They added some of the modern amenities that were there. And he was able to turn that property around and refinance it and pull cash out while maintaining ownership. Now, these are long periods of underperformance that he had to suffer through market volatility. Office back then in the central business district, and especially in the global financial capital, would still have been relatively attractive.
I mean, this was just after Black Friday too, right?
Just before.
Just before.
Yeah, it was 87.
But what I'm saying is that, so even during the turnaround, you're going to have that market softness too. So that probably extended that, turnaround on the project too.
Absolutely. And this was right when Wall Street came out, right? So
Right.
Hollywood pushing Michael Douglas and Charlie Sheen, and they're blowing it up. And
Yep.
Wall Street was made sexy again, even though everybody had just gotten their asses
They
handed
just
to
all
them.
jumped out of the building.
Right. And what ends up happening was that, people think that was random.
Yeah.
That they make that sound like a good thing. No, they found the most marketable young and old star that they could. They put together a story to try and repackage Wall Street so that people would buy it again. And it showed how it was these bad actors like a Gordon Gekko that caused the collapse, but that standard markets that are well regulated could be trusted.
Are you saying Wall Street was a propaganda film?
Yeah. And that's the first F-bomb on this whole podcast.
Okay.
You can decide whether or not you want to keep it in the edit, but absolutely it was.
Okay.
No doubt about it. So what ends up happening, he's right in the heart of this, and he knows that this propaganda machine is coming. And so he puts it together, and all of a sudden, he's able to get this thing leased up. It required patience, ongoing capital, and quality management.
And people are going to experience these things on their deals too. And that's why we're doing
And
this
not
episode.
at the scale for sure, but
No,
of course
but
they will.
it's relative.
So the current estimated value of this building right now is about $650 million.
That seems even light a bit.
Well, you know what? But Central Business District office right now is not hot. It's
Okay.
down,
Okay,
actually,
so that makes
right?
sense, yeah.
So he's been able to go out and refinance this multiple times. When you take refinance proceeds out, you're talking about hundreds of millions of dollars cash, tax-free, to be able to use in other investments.
And the cash flow.
And the cash flow.
Because people have been paying him rent now for 40 years.
Well, and it's an iconic destination. If you say you're in 40 Wall Street, it matters. And I've been to 40 Wall Street on multiple occasions, even for meetings with the Trump organization. And it is a fantastic facility right where you want it to be. And so, again, another huge win, again, early in his career, before politics started to dent a little bit of the, let's say, the gleam on his persona.
So about how much would he have made on this $1 million initial investment?
I mean, it would almost be an unlimited return because it's still paying dividends. I'm confident he used leverage. It may even be possible that the $1 million didn't even come out of his own pocket.
Probably.
Okay,
Probably
so-
came from his dad as a small loan.
Listen, I financed my own deals. It's completely overblown. I had nothing but assistance to get started, but I saved the company. The stuff that we were doing in Queens wouldn't be worth anything today if it didn't have a Trump name attached
All right,
to it.
I just asked ChatGPT, and they're estimating the equity gain, not counting the refinance proceeds, not counting the cash flow, equity gain on that $1 million investment. They're estimating over $450 million.
Makes all the sense in the world. And yet people want to sit there and argue about valuations in portfolio and if he's a billionaire and all those other things, which is kind of preposterous. I mean, I think everybody knows the story. So the lesson here is buying distressed assets and being able to outperform the market because you get to reset the clock.
And you teach that all the time.
Well, that's what we do. We're value add guys. We look for distressed assets where we can step in and add value. And what we teach people how to do early on, Ryan, is to get people to right size the deal.
Yeah,
you might be able to have the $1 million, but that deal is way too complex and way too big for most people. It's something that he could handle. But that $1 million that you may be able to raise, or $500,000, or even $100,000 that you could raise, could allow you to go ahead and truly get those types of astronomical returns over time.
Sure.
Where you're 2xing, 5xing, 10xing, even 20xing your returns. But again, it's a blueprint as to how to do it. And again, the lesson here for me in the end is that they were refinancing the property rather than selling it to create their revenue along the way. And that was huge.
And you do that in your own career too.
Absolutely. It's my number one strategy is to refinance once stabilized. Helps me take out my capital partners who don't want to be in it forever. It allows me to get my own proceeds tax-free because they have to be paid back, but my tenants are going to pay those back. And then it allows me to continue to hold on to the asset and maintain usually as much as 40% cash flow. So, the banks use things called debt cover ratios. So they want a 1.4 to 1.5 debt cover ratio, which means I'm bringing in $1.50 in rent for every dollar I pay out in mortgage after expenses and all operations. So if I'm making 50 cents and the bank's making $1, I'm doing pretty well on cash flow, in addition to being able to pull out those huge slugs of equity along the way.
So when we were talking about preparing this episode, let's talk about this property next. You said that you've actually stayed here, so I think that's why we can go to that one next.
Yeah, it's fantastic.
And this is kind of a more recent deal too.
Absolutely.
Didn't this kind of happen in between his terms?
So this one actually happened just prior to.
So this is Trump International Hotel in Washington, D.C.
Correct. It used to be the former post office. It was the old post office, and they took a post office building that was really left for dead. It was a derelict structure. You know that the U.S. Postal Service has really downsized a lot over the last,
Market ain't what it used to be for the post.
Well, because email, right? Email came through, text, so you can get your messages across. Where, again, 30 years ago, you're putting it on a piece of paper, you're putting it in an envelope, you're stamping it with a stamp, and you're sending it off in the hands of those fearless people. Rain, sleet, snow, or dead of night will stop the postman from delivering your message.
That's right.
So that was fantastic. And this was the one in, let's say the capital of the United States.
Yeah, it's right by the mall.
It's the big
National
one,
Mall,
right? So it had fallen into disrepair. Nobody could figure out what the use was. And so the Trump organization came in and they said that they would develop it into a luxury hotel brand.
Yeah.
Fantastic facility. It opened just before the 2016 election.
Okay. I had my timing wrong.
Yep. So the 2016 election, and it's actually where he held his inauguration party. So his post-inauguration party was held at this facility, and we were there. Again, we've always been involved in politics. We believe that your voices need to be heard, regardless of what side of the aisle you're on. The thing that's in my mind most disappointing today is that political discourse is not really allowed. It's not you either back your party's line or there's no conversation, and anybody else who has an alternative opinion is the enemy, which is ridiculous.
That's stupid.
It's got to be changed, and we'll get into that in maybe another episode.
Sure.
But since we're adjacent to the current president, it should be talked about because he's doing a lot of good things. And he's using a lot of these development strategies to help reposition the United States after generations of outsourcing our manufacturing prowess, our technology, to where we became a consumer society. And as a consumer society, you really have almost very, very little to no value globally.
Yep.
Now, this particular asset was one that they turned into an amazing facility. It's been an incredible redevelopment, but they structured it uniquely, right? In most instances, you'd think, well, you don't want to improve a property that you don't own.
Sure.
But he did something that we did here also because we've got a ground lease, right?
So what's a ground lease?
So a ground lease is where you control the property, but someone else owns the actual dirt that the structure is built upon.
Okay. So like Yankee Stadium used to be owned by the Knights of Columbus.
Yep.
They owned the ground lease, and they're an insurance company. They take those, membership dues, and they bought the ground lease and invested in that, and then turned it back into profits for, and that happens all over. There's a ton.
It happens all over. In fact, we're in the process of looking at maybe the original John D. Rockefeller building in Cleveland, Ohio, and turning that hopefully into a luxury brand hotel.
Yep.
Kind of modeling this strategy, but differently.
Yep.
It's got the cachet, it's got the name, it's got the history. It needs everything, but it could be great.
It's the same deal we had with the Panama Canal.
But in New York City, when Rockefeller moved from Cleveland to New York,
Trader.
He bought Rockefeller Center, and that is on a ground lease. It was ground leased from the Dutch Reformed Church from when New York was New Amsterdam. And
Back when Wall Street was a wall.
Right, and they've had that ground lease since 1540.
Well, that's a good investment long
That's
term.
a damn good investment. They're moving up on 500 years of
Ah,
ground.
those Dutch.
Those Dutch, right?
You know.
If only they could hang on to the hay.
There's two things I hate in this world: racism and the Dutch.
Okay, well, aren't they one and the same? Cut that.
That's a joke. It's a well-known joke.
It's a well-known joke. Yeah. In your house.
In my house.
So in any event, he ended up ground leasing this property from the federal government. Okay, they had a post office. They didn't want to buy the whole damn
So
building.
the government will grant ground leases too?
Absolutely, on derelict buildings, the structures that they need. And in fact, right now, I'll put it out there, the current administration is downsizing government. There are hundreds and hundreds of buildings that are going up for auction right now.
And the government don't have skin in the game. They'll cut those things loose.
They'll cut them loose for nothing.
Yeah.
Right, just get them off portfolio. They don't want the operational bleed. They don't want the overheads, and they can start generating tax revenue.
And then they can say, look at how much we cut from the budget this year.
Yeah,
I mean,
and
it's a
again,
win for them.
And again, I think we can all say that government's gotten a little bloated. There's a little too bureaucratic. This was a redevelopment, again, into a luxury hotel. It was significant renovation. Capital was invested, hundreds of millions of dollars. I think what we're saying is it was $200 million in renovation costs on a 280,000 square foot facility. It's a 99-year ground lease. Current estimated value on that building is about $400 million.
Okay.
And so, they made about $100 to $150 million in profit.
And he disposed of this property, right?
I believe they actually still operate it, but they may have fractionalized the ownership.
I think when he went
On a
back into
ground
office, they kind of was forced to or something, I believe.
That may be the case.
I think something of that nature.
I'm not exactly up to the minute on it, but here's what I will tell you. It was a successful reposition of an asset that
no one else knew what to do with.
Yeah, it was an adaptive reuse, and that really requires a lot of relationships, understanding. To redevelop a 100-year-old building and to turn it into luxury hospitality, you're talking about the most discerning clientele with the highest standards that expect some, really good value for their dollars that they're paying for their overnight stay.
Now, a buddy of mine just went down to Miami last week, actually, and he played at this golf course.
Doral.
So he played at Doral. Yeah. He said it's really, really hard. He said he sucked on the first 9 and then was like 10 under on the back 9. He said it was really difficult, but Trump National Doral, Miami. So let's talk about this deal because, look, so far we've talked about office buildings, but Trump is investing in a lot of things. And
hospitality and recreation are two of the more difficult categories that he has really excelled at. And I've developed golf courses. I've developed 2 golf courses, and it's fun and it's exciting. And golf today is not the stimulator for real estate that it was back in the 70s, 80s, 90s. But it's still a fantastic game, and it has broad appeal, especially among the more well-to-do demographics. A lot of deals get done on golf courses.
Yeah, the Outdoor Village Mall is the golf course of the 21st century.
Yeah, I mean, it really is it's the boardroom of the 21st century.
Yeah.
A lot of deals get done there.
Yeah.
And so Doral is a famous course. It was professionally designed. It was very high profile, but it had also fallen into disrepair. And Trump has done a lot of golf courses, and he usually does those around golf club memberships, things of that nature. And again, it's about access, it's about quality, and it's about luxury. It was purchased at a discount, heavy discount, and there was a ton of reinvestment in it. I think, if I'm not mistaken, it was purchased for, $150 million?
Yeah, so 2012 purchased for $150 million as a distressed asset.
And about $250 million, $250 million put into renovations and improvements, right?
Wow.
So
golf courses are expensive.
Well, that's a crazy number, though. That's a crazy number. That is top flight on every possible facet. And you're also talking about hundreds of acres in Miami.
Yeah,
so
800 acres.
Right, so the land value alone in Miami, so here's the secret. Most people don't know this. Golf courses frequently are a covered land play.
Really?
Yeah, so they allow you to take massive amounts of land in great areas.
That makes sense.
Generate revenue through operations and luxury, and then down the road, when it's time to pitch the membership, you take all of the legacy equity investors, you get them paid out, and then you take the 800 acres in the heart of Miami, and now all of a sudden you create these amazing communities. The holding on to that is worth probably 10 times what they have in the deal.
You're right. Dude, I see that all the time in my own city. I've seen 3 golf courses in the last 10 years converted into new housing developments.
And normally when they're granted the zoning of becoming a golf course, it says you're prohibited from doing that. but eventually it becomes the highest and best use.
Because then the city wants those tax dollars.
They want those tax dollars. You only get so much off of luxury membership fees.
Yep.
So in the end, I think the estimated value gain on this is about 200 to 250 million.
Okay.
But that's just for now.
So it's valued now at 600 million. So then he was in 400,
which is fantastic, and I'm sure it was all leveraged because it was again derelict in a community and needed to be redeveloped. It had this unique zoning. If you don't have golf course experience, you're certainly not going to be able to run it.
Sure.
And his courses are known for being challenging, professionally maintained, and also they drive a lot of celebrities.
Yeah.
Right. So those things are good. But the real value that most people aren't thinking of here is that it's that covered land play. Yeah. And that's something that is an incredibly sophisticated strategy that can be deployed over multiple generations.
That's smart. All right, so we've talked about kind of successful deals, right?
Yep.
Now, we already said not everything he did, not anything anyone has done is always successful.
That's
so
true.
Let's talk about one that maybe was kind of a punt, kind of a push, right? And then we'll get into some ones that maybe went a little bit more even worse.
Yeah.
Now, Trump International Hotel and Tower in Chicago. So that, again, this is a marquee property. I mean, this is a visible part of the Chicago skyline. Let's talk about that one a little bit, right?
Well, so I was just at Trump Tower in October.
Okay.
I was there.
Which one?
With, the one in
Chicago.
Chicago.
Okay,
That's right.
okay.
Right? Yep. So the International Hotel and Tower in Chicago. And we were there with a couple of our clients who are they're doing massive multifamily development in the Rogers Park area.
Okay.
And they're working on projects right by Northwestern University. And they're assembling all of these 1930s and 1940s multifamily that are in massive need of renovation. And they're currently battling through, a tenant revolt. They don't want people coming in and fixing them up and raising rents and all of that. And so there's a lot of political turmoil there. But when we were there and we were working on it, we went to the Trump Tower and Hotel right there, and it was gorgeous.
Yeah.
Unbelievable. I mean, the view of the river, taking a look across at the clock.
I mean, being on the river in Chicago is the place to be.
It is. It was fantastic. You could see, the harbor going out to Lake Superior. So, I mean, it was really fantastic.
Yep.
Is it Superior or Lake Michigan?
It's Michigan.
It is Michigan, not Superior. So Lake Michigan, and you're just looking at it. I mean, it's just gorgeous.
Yeah.
The problem was that it delivered at the exact wrong time, right?
Okay.
So they delivered the project at the time when there was this huge meltdown, right? The pricing strategy was luxury, the Trump brand, all of those things. But then you got the exposure to the 2008 great financial meltdown.
Yeah, and look, a lot of good deals took it on the chin at that moment. I mean,
Absolute failure.
I mean, some of your deals did.
Absolutely, and one of them was a golf course.
Oh.
Right. So talking about synergy and talking about confluence and callbacks and all the other stuff. We had a golf course that got in trouble. It was an asset where the bank actually got shut down by the feds.
Oh, that's
okay,
fun.
not me.
Oh,
we still
no.
had development funds. We had interest reserves, and the bank got shut down. They actually lied to us and said that they needed us to inject more capital so that they could release our proceeds, which we did, only later to find out that they were under cease and desist order. Mm-hmm. We ended up getting into a litigation. They sued me. I sued them. In the end, we bought our own asset back at a massive discount, 25 cents on the dollar, and the whole thing ended up working out. But everybody got hurt in 2008.
Yeah,
there was literally almost no developer who was mid-project or delivering a project who didn't end up getting hit on this one.
Right, because everyone was doing their pre-sales, right, to kind of fund the project as it was going. Like you were doing that
Absolutely.
also in,
we
in
were
the
selling
development.
lots. We were selling memberships.
Which is the way it goes, right?
That's how it has to happen. You have to have pre-sales to get some absorption so you can put the financing together. The problem is until you deliver it, you only usually get about 5, maybe 10, maximum 15, 20%
Of that.
of the ultimate sale price.
Yeah.
And because things had gotten so bad, many people walked away from their deposits.
Right. So then, okay, what you got going on is you got all these pre-sales, you've got the momentum, and you are presuming that it's going to go on the same or relatively same trajectory. Then you have this financial crisis.
Yep.
2008 sucked, dude.
Well, for most people.
I wasn't doing shit in real estate, and it sucked for me. It sucked for everyone.
I mean, Lehman Brothers, Shearson Lehman Brothers, vaporized, gone, out of business, never to be heard from again, right? Massive insurance companies. Over 250 major national banks absorbed by others because completely insolvent.
I mean,
And we'll get into it in another episode. I mean, we're in the same situation right now with banking. Banks are wholeheartedly insolvent right now.
no, dude, don't tell me that because I don't want to live through that again. That
Well,
sucked.
you know what? But we made a lot of money off of it. And in the end, I don't think the lifestyle changed all that much.
Yep.
So it was structured with condominium pre-sales,
Yep.
right? To get that project built.
Yep.
It was a brand-driven pricing strategy, so the Trump name elevated the costs. And then in the end, when they sold the condos and the market crashed, a lot of people just didn't close those contracts. So selling units can reduce risk, but macroeconomics and timing still actually rules the day. You don't get yourself in a situation where, nobody, and I don't care who you are, how big you are, could sustain a loss like that on a project that didn't work. I mean, maybe Elon Musk, but nobody would.
No,
right?
no, because
wouldn't.
even if that deal happened, his stocks and everything would have tanked so hard that he wouldn't have had, no one can do that.
Right.
Because, his value is unrealized too, his net worth.
And so in the end, it's still branded Trump.
Yep.
I'm not even 100% sure if they're still involved in the management of it. They may have still some version of management, but they licensed that name for a period of time.
So Trump licensed the name Trump to other operators.
To other developers, yes. And then he gets an equity stake. They get a branding bump for absorption.
Got it.
Okay. Now, they may very well have been involved in all of the construction, the design, and all the things, make sure that it met the Trump brand standards and all of that. But in the end, it wasn't enough to save it.
Yeah, it's not like the Wrigley's gum people are operating Wrigley Field, right?
Correct.
Okay.
And so in the end, this one was...
The Wrigley gum people did build the field back there, but whatever.
Yeah, and look, I mean, and the Cubbies are still one of the most beloved franchises in all of baseball lore.
Yeah.
Even though they've only won one World Series, which they stole from the Cleveland Indians in 2016.
The rain delay was bullshit.
The phantom rain delay that lasted 10 minutes.
We got to go on a rain delay. Go to commercial.
Go to commercial, rain delay, take out the closer who's about ready to close this thing out.
Come on, ice his arm.
Joe Buck was literally in love with Kyle Schwarber.
I know. The bromance between the Schwarbs, the great Schwarbino.
I mean, he has sustained a little better than I thought he would, but, come on, give me a break.
He had a great year last year. Guys, look, I know we're getting a little bit sidetracked. We're supposed to be talking about Trump's
take
real
this
estate.
off.
No, this hurts. This hurt us.
Still hurts.
Still hurts.
10 years later.
I'm never going to get over
definitely
it.
bruised.
I'd rather have the 2008 financial crisis than
another
Series.
Game 7 loss,
Yeah.
like the one in 97 to the Marlins.
Yeah.
Crazy. I mean, just 2 outs, seventh in the ninth inning.
We've been hurt. We've been hurt, okay?
It's deep. It's deep. The
Okay.
wounds are deep. So
It
getting
can
back
show up
into
at any time.
Here's the thing. With this particular property, I'm going to say that if it doesn't succeed, they're going to lose the branding. So it will no longer be the Trump Hotel. It will no longer be the Trump Tower. But there is momentum. The problem is in Chicago, you've got a lot of turbulence. Mm-hmm. There's turbulence in what's going on with immigration, turbulence politically, turbulence with taxation. In the city of Chicago, it has by far the most onerous tax burden of any city in all of North America.
Really? I didn't
It's
know
not
that.
even close. You have to challenge them every year. And so a project like this could really hurt, somebody who has to hold it. So this one is estimated at a meaningful loss, but certainly no profit.
Well, the things that I said, they estimate it, ChatGPT estimates maybe a break even or a modest loss.
Yeah, but
because
not
again,
to him.
Not to him.
Because he licensed the name and the branding and didn't guarantee and backstop everything. And again, it still operates as a luxury hotel. It's got great restaurants, amazing views, excellent concierge service. It's still in a great part of town. It's just Chicago isn't Chicago from 15 years ago. Even the Magnificent Mile isn't what it once was.
I do love Chicago. Chicago is one of my favorite places to go.
Well, and when you're there, it still feels like Chicago. I
Yeah.
mean, they'll tell you it's bad, and there are areas, and you don't want to be, riding the L train at 2:00 in the morning, but you won't be.
Yeah.
So Chicago's still fine, but you do see a flight of quality, and you do see a flight of industry, and you do see a flight of the wealthy to get out of these areas where the taxation is high.
Nashville feels now like Chicago felt 20 years ago.
Very promising, very up and coming, very motivated, and
a
business friendly.
Big city with a small city charm.
Yep. And I guess a warming environment from the folks who live there. Chicago used to be one of the most friendly, welcoming big cities in the world.
100%.
Today it's really not that. Today, it's a lot of pockets of a lot of folks who unfortunately have been trained to be fearful of one another.
It's unfortunate. Do you know what I'm not afraid of?
What's that?
Clicking like and subscribe buttons on content that I like.
Well, hopefully that's what we're
And
delivering.
look, if you're from Chicago and you're still one of the good ones, you've already clicked like and subscribe. But if you're from anywhere else, this is how I'm going to judge you and on your characters, whether if you take the 1 or 2 seconds it takes to click like and subscribe. That way, anytime Scott releases new content, whether it's his podcast or any of his training videos, they're going to be delivered to you. So if you're listening on Spotify, watching on YouTube, if you're seeing this on social, subscribe, click like, and go to commercialacademy.com to learn more about all the different training and offers that Scott gives. Now,
well, and we're going to help you with this. I mean, it's a little bit of a tongue-in-cheek push, and I appreciate that because
it's
we
not
don't take
tongue-in-cheek. No, you're a bad person if you don't click like and subscribe.
Well, and you don't have to do it right away, but eventually you'll do it because you're going to see that what we're offering you really has intrinsic value. And whether you plan on investing yourself or whether you're going to invest through others, or you just want to be aware about what's going on and how things work in society, because commercial real estate drives so much of our social environment. It has so much to do with the way our cities are maintained, and it has a lot to do with the amenities that are afforded to the people who live in various parts of the world. And so we're talking about these things, and so we're going to be covering other topics that aren't just commercial real estate, so stick around, and hopefully you like it. We don't take ourselves too seriously, but anytime we're giving you advice, we take it incredibly seriously.
So that was good cop, bad cop.
So in the end, here's what I'll tell you. Yeah, you can bad cop every once in a while. I bad copped a lot.
They know.
I bad cop for a lot of the folks that I'm partners with because I don't mind taking dents to the reputation because I can stand up to it. And when tenants push back on people, look, put it on me. I'm the guy who won't say yes. That's fine. Now, there are other projects that we have the ability to talk about.
Let's do 2 more quickly.
Okay.
Let's do 2 more. So the 2 more. Here's one that was a pretty significant loss. That is the Trump Soho, New York.
Yeah.
Okay. Luxury hotel condo in Lower Manhattan.
Yep.
And this was a joint venture, though, with other development partners, right? So that's always a risk, right?
Well, it is a risk, but
with the wrong partners.
But the way that it works is that in a lot of instances, the equity is brought by the Trump brand. In fact, back in the beginning, you may remember this, I was offered a position to be a founding principal of Trump Mortgage.
Okay, I remember that.
So back in the day, Trump was going to be offering banking services, and they were going to bring mortgage capital to the housing market and to the commercial market. And this was back in 2007. So the timing could not have been worse for them to get in the mortgage business because everybody was about to collapse. But maybe they'd have been able to pick up a lot of stuff. Here's the long story short. When I went in there and they talked about it, they said, all right, Scott, we're going to do this. You're going to be empowered by the Trump brand. It's going to be, Commercial Academy powered by Trump Mortgage, and you're going to get this branding and you get all this other stuff. In the end, they said for offering that branding, they wanted a 75% stake in my company.
Wow.
And I'm like, wow, that's bold and that's brash, and I bet you could add a lot of value, but you can't have 75% of my company.
Yep.
So I don't know what the deal was on this joint venture, but that's what happens. They get their equity stake for bringing branding, expertise, and then
name,
understanding, right? And so with these types of development partners, they didn't take the risk on in a lot of instances. So it's branding, minority participation. They
460,000 square foot luxury condo development. Lower
exactly, and it was, and luxury demand and hospitality was kind of waning a little bit when this one happened as well. But they brought that branding, and at the time when this happened, the Trump brand was fantastic in New York. It was among the best. But branding can't fix bad fundamentals or timing. And the timing on this one was pretty rough. In the end, the outcome is expected that the partners lost about $100 million.
Ooh.
And it didn't really flow to the Trump organization because of the way it was structured. So they had
So
loss
he didn't
stops.
lose $100 million on that.
No way, he had loss stops. And again, this talks about the sophistication of the way you structure partnerships. And if you're not in control of what everything gets done, even though you have brand standards and even though you have all these other things, you want to hedge your bet. So in the end, I would tell you that they lost money. The Trump brand in Soho, while it was an up-and-coming community, it still had that artsy sort of eclectic vibe to it.
Maybe the wrong brand in the wrong place.
Well, I mean, ultimate luxury doesn't always work in artsy communities.
Yeah, then you have to struggle for art.
Well, you got to die. You got to suffer for your craft.
That's it.
I think that's the way they say it.
All right, let's do one more. And this one there was dozens and dozens to choose. I just prepared a couple.
Well, there's one that I wanted to talk about real quick, and this is
it's your show.
Thank you, I appreciate that. It's our show. You're here with me, man. We've done them all together, and it's been an honor to have you here, truly. And I don't know if I would have ever done this without you. So thank you for that. You guys all owe him a debt of gratitude if you're enjoying this. So what we're talking about is there was a resort that eventually became the Atlantis Hotel and Casino down in the Bahamas.
I've been past there. It's crazy.
Yeah, it's fantastic. And it was originally owned by a hospitality brand out of Australia.
Okay.
And it's fantastic. But back in the day, it was languishing, it was suffering. And so Trump came in and he bought it when it was derelict and it wasn't doing well. And he started to build up the brand. And he came up with this vision. And he sold this vision to Merv Griffin and an investment group that turned it into what was at the time the premium destination themed environment in the entire world. The Atlantis Hotel and Casino opened before Las Vegas started to brand their hotels as, let's say the Middle Eastern experience with, the Aladdin Hotel and Casino, or Planet Hollywood, or
Caesars.
the Luxor, or Caesar's Palace, right? And so with all of those, Venice, right, the Venetian, right? So before that, Atlantis was the first one based upon the mythical.
So it's innovative.
But it was theme consistent throughout. The largest indoor aquarium at the time was in the world, right? With sharks and unbelievable, all sorts of sea life.
Look, I've seen a lot of aquariums. This, when I go to Atlantis, this is the biggest aquarium I've ever seen. You've never seen an aquarium this big. We got sharks.
Our sharks will actually engage with the clientele when they come in.
Right.
And more than that, you can swim with the sharks, and the sharks will have lunch with you, and you won't be the main course.
Look, sharks are friends, not food.
Fish are friends, not food.
That's it.
That's Brucey. So what ends up happening is they sell this vision. They go over there. Michael Jackson, the biggest star in the world at the time, stays in the Bridge Tower Suite. It's still to this day known as the Michael Jackson Suite. And you're talking about $30, $40, $50, $60,000 a night for this room, something that had never been achieved before. And it was because of that cachet, that branding, and all the things that they brought. Now, again, offshore, derelict property, turning it around by bringing him. And at the time when this happened, you got to remember, this guy's in his late 30s. He's not 75-year-old, 80-year-old Donald Trump that he is today. This is a guy in his 30s, and he's leaving the comfy confines of Manhattan where he knows the zoning and he's got all the political connections.
This is a big swing for him.
This is huge.
Huge.
This was huge. I have to tell you, this was maybe the biggest project I ever worked on.
If Michael Jackson was still around, he'd probably list his pronouns in his Twitter bio.
I don't know about that.
Yeah, he would list them as he.
Hee.
It's so dumb. Now you've been to Atlantis a ton of times.
Yeah, we go. In fact, this year we're holding our annual retreat there for the fourth time because our clientele love it so much. Bring your families. We're rolling down what is maybe the best lazy river that I've ever been to.
It's the laziest of lazy rivers.
You've
never seen a river this lazy.
Well, and it's aggressively lazy too. So you just got to be careful.
So does Trump still own this property?
He does not.
Okay.
He got out of it and he exited and he did incredibly well. And then he went around and created these different types of hospitality environments. So, it was one of the earlier forays into hospitality. So we're talking about office, hospitality, housing, golf courses, recreational, land development, and all of those things have ultimately transitioned into his ability to cut international deals at a political level with, some of the major nations in the entire world.
Yeah, there's Trump developments in the Middle East. There's Trump developments in Southeast Asia.
Well, but now he's using the full faith credit and the cachet of the entire United States to cut global deals, right?
Yeah, and not for his own personal real estate deals. He's doing that on behalf of the
But it's built
government.
on this experience. There is literally no doubt
course.
about it, right? Brokering deals for resources, for rare earth minerals, for strategic defense.
Greenland, got to have it.
Well, when you say things like that, it's bombastic and it's inflammatory. But what he's saying is it's a squandered resource amongst the NATO allies. We've got to do something with it. And if you won't get on board,
if you're going to let Greenland ice melt like they did for the women ice rink,
yep,
I'm going to have to come in and operate it.
Yeah, the Wollman ice rink is dying. We're going to save Greenland because we are seeing a lot of movement in the Arctic region based upon new shipping lanes because of changing polar ice formations. So it's got to get done.
Yep.
And Russia has invested heavily up there. So he's using these strategies. So in the end, what I would tell you is I would have to say no one's perfect, that not every deal works, no doubt about it. But anyone who sits back and would say that the Trump family, the Trump organization, and Donald Trump specifically is anything but an uncategorical success in commercial real estate investment and development simply just doesn't know what they're talking about. It's primarily motivated by your dislike for the man and the personality.
Which is fair, fine, but
Fine.
but it's not true for his real estate.
For his real estate side, he did a great job, and he used the rules of the game to insulate himself from downside risk and to take advantage of opportunities that would exist that have set himself and his family up for many generations to come. And I think he's looking to do, similarly for the United States, whether you agree with his philosophies or not. That's the motivation behind it. And so in the end, I would tell you this. There's a lot of lessons to be learned. If you haven't read The Art of the Deal, go read it. But we teach these principles and how you can use them on what we would consider to be a very accessible level, whether you're brand new to this business, whether you've never been involved in commercial real estate, or you already have a relatively robust and active portfolio. We can show you how to take things to the next level. I can absolutely help you insulate yourself from further risk. I can help you capitalize on what I believe is the coming turbulence in the marketplace. And we can help you do that in short order. So click on the link below, click like and subscribe, and make sure that you get more of these episodes moving forward.
Yeah, and like Scott mentioned, if you want to take part and you want to learn how to become a real estate and commercial real estate developer from Scott, he's trained tens and thousands of people over the last 20 years. All over the world, of all different backgrounds, of all different, capabilities and financial starting points.
And we hold those events every quarter.
Right. And I've seen it personally, right? I'm not blowing smoke. I've seen dozens and dozens and dozens of people come from nothing and turn into millionaires by learning from him how to invest in real estate.
Well, that's kind.
It's true. It's true.
It's true.
So look, if you want to learn more about how you can get those training, you go to commercialacademy.com. You can take part in his private training groups. You can take part in his commercial hub training platform.
But it's accessible like right now. You could start this minute if you wanted to. Get yourself prepared, start figuring out how to break down transactions, how you can capitalize. Again, you're going to pick two markets, and one of them's got to be your backyard. And you're going to pick two asset classes, whether it's apartments, retail, land development, single tenant net lease, hard corner sites, whatever it is. And if you don't know what those things are, you're definitely going to want to listen to Colossal Cash. It's our starter program. It's helped hundreds of thousands of people launch their careers.
It's the best-selling commercial real estate training program of all time.
That is true.
And maybe we'll see some of them in Atlantis.
I'm looking forward to it. Hopefully we'll see you later this year. God bless everybody. Thanks so much. We'll see you next time on Huge Profits.
Huge.
These are huge.